Hello guys, welcome to FX Preven Felix Argo Decode. My name is JD. Today I'm going to talk about trade invalidation. I will be sharing a video series about this concept. So make sure you follow carefully guys, because this is going to be a very powerful concept that you are going to study. And as of the time of recording, I'm nearby a street. If you hear some kind of noises, so please put up with it, because I'm nearby the street guys, and there are some vehicles traveling. So understand that and try to listen to me carefully. Do not mind much about those noises outside there. So I will be sharing guys a video series about trade invalidation, maybe like 2 videos per day, and I want you guys to understand how to use this concept, and you have to use to your advantages guys. So please follow carefully and repeat the video as much as possible. Go to the chat and try to back test, and then I'm sure you are going to see something amazing. So these are a basic, and I'll be sharing a classic invalidation setup, how it looks like and how to trade it. So make sure you follow carefully guys, and remember to subscribe, like and share. Without wasting time guys, let's dive deep. Here is something that you need to understand guys. Okay guys, welcome back. This is JD. So here is a good saying, if I can say: if you can tell whether it's impulsive or corrective move, you are ready for it. Whenever you open your chart, and use any time frame, if you can tell whether the structure you see is impulsive or corrective move, you are ready for it. This is a very powerful concept. Whenever you open your chart, let me repeat one more time. Whenever you open your chart, make sure you decide whether the structure you have at the moment is a corrective move or impulsive move. That's step number 1. Try it. Number 1, make sure you understand whether the structure you see is impulsive move or corrective move. Right? Do not mind where for example, do not mind where the correction is going to stop. For example, do not mind where the correction is going to stop. For example, if you find that your market is in a corrective move, do not mind where it is going to stop. Right? Of course, we discussed that in the premium. For those students, they already know things to look here on the left side. But as of now, as you are following me, do not mind whether it's going to stop here or there. No. First of all, try to teach yourself to understand whether the movement you see is a corrective move or impulsive move. That's the step number 1. So again, you have to know your time frame. Let's have this structure here. So you open, for example, your monthly time frame. On your monthly time frame, you see a clear structure, mostly a structure with beautiful candles without many pullbacks here in this area. So you see this as your basic structure, on the monthly time frame, for example, which is not complex, right? So after seeing this, you need, if for example you see for example a bullish candle here, For example, this is a one bullish candle. You are on a monthly time frame. So you need to use a different time frame to study what? To study the details you have here. To study the details you have here. But what is more powerful is that you are able to tell that this is impulsive move. This is going to be a corrective move. Do not mind whether it's going to stop here, or to stop here. That's something we'll discuss. But step number one, focus on understanding whether you are in a corrective move or impulsive move. If you are in a downtrend, you already understand that corrective move will be pushing all the way to the upside. For example, this is impulsive move. Corrective move is going to create this type of move, right, in a counter direction. So you understand what I mean? So now do not So now do not mind whether it's going to stop here or here. As of now, it's not your job. Your job, try to understand whether you are in a corrective move or impulsive move. And then remember, every time frame will create its own trend. Every time frame will create its own trend. Do not forget that. Every time frame will create its own trend. So what does it mean? So on this time frame, let's say this is a monthly time frame. If this is a monthly time frame, so this is a bearish trend. This is a bearish trend. So if you change to another time, a corrective move here, you're going to see a correction forming like this. So understand, this is a bullish trend on, for example, on the weekly time frame. This is a bullish trend on weekly time frame. If you decide to start this zone on a daily, it will create its own trend here. So this is what? This is a bearish trend on a daily time frame. If you can understand what I'm talking about now, you are ready to go, guys. I promise, you are ready to go. So here we have what? We have our structure. We already have our structure on another time frame. You have your structure on another time frame. So this red color is what you are likely to see when you switch from monthly time frame to weekly time frame. So if you have impulsive move here, this is going to be a corrective move. Please use a different time frame to study a corrective move. Use a different time frame to study a corrective move. Hope you understand. So understand that if we ignore this structure, you can see how many trends we have. You understand that this is going to be a trend. This is going to be a bullish trend on weekly. This is going to be a bullish trend on weekly. This is going to be a bullish trend on the weekly time frame. This is going to be a bullish trend on weekly time frame. So within this area, understand that if you know this is a weekly structure, so understand that this is high, this is a weekly high, this is a weekly low, this is a weekly high, this is a weekly low, this is a weekly high, this is a weekly low, this is a weekly high, this is a break of structure on your weekly time frame. This is a break of structure on your weekly time frame. So now, if you want to study a weekly corrective move, so what is likely to be a weekly corrective move? A weekly corrective move is going to be this area. A weekly corrective move is going to be this area. a weekly corrective move is gonna be this area. This is your weekly corrective move. This is your weekly corrective move. This area. Do you see that, guys? Do you see that, guys? This is helping you guys understanding basic structure and the time frame. Basic structure and time frame. This is your weekly corrective move or your weekly pullbacks, if you can say. So in order to study this zone, if you want to take any trade during this pullback or this corrective move, please use daily time frame. Use daily time frame. Use daily time frame to study these zones. Hope this is clear and very understandable, guys. Hope this is very clear and understandable, guys. So as market is reaching a certain transition zone, it will be looking for what? It will be looking for certain invalidation setups to trade from, or simply some gaps or some imbalances, guys, in order to make a reversal. But during a reversal or a transition zone, when we say transition zone, is your market changes from one direction to another. This is a transition zone where market is changing from this uptrend into downtrend to a downtrend. This is a transition zone. This is your transition zone, guys, and this is your transition zone, and this is your transition zone. This is your transition zone where market changes from one direction to another. So this is the most crucial zone for you to find what? To find all of those invalidation setups that we'll be talking about, guys, in this video series. So hope you understand this concept. First of all, choose your time frame. Start from high time frame as much as possible. Then you go lower. Go to lower time frame slowly. Then you will do what? You will likely find what? You likely find a setup you need. So let's use a chart, guys, to explain this concept. And once we finish this video, I'll be sharing you guys another video later that will follow this one. So let's say, for example, which pair can we use now? We have, like, let me check USDJPY, the one we talked about in our order flow analysis. You remember, guys, it's been playing as we predicted, guys. That's why I say you will always love ranges, because we focus much on ranges. I said you will love ranges, guys. You see USDJPY has been playing as we predicted, even NZD card playing as we predicted in our order flow videos, guys. So use like USDJPY, TDPU, or TDPU, see what is going on. I'm sneezing, guys. So here, let's say for example, this is a free. Look at the time frame I'm using, guys. Look at the time frame I'm using, 3 months. Here, look at the time frame. So, for example, if you want to study this movement alone, this move, this downtrend you have here, it's been going down since 2007 all the way to 2011. You see, almost 4 years. You understand? So this is your trend. So now, if you look at this structure, you can easily see that you have a low, a high, a low, a high, a low, a high, a low, a high, a low. This is not a high, this is not a high because it failed to create a low. Because you got a breakout structure here. You understand? So what are we focusing on here? We are focusing on understanding whether we have what? Whether this is a where is impulsive move, where is a corrective move. If you remember, we are doing something like this. Please always start from higher time frame. So you have a structure low, a structure high, structure low, structure high, structure low, structure high, structure low. As you can see, this is the structure market is using. So you understand that this is what? This is a corrective move. This is a corrective move. This is a corrective move. You see that? Then this push is impulsive move, corrective, impulsive, corrective, impulsive, corrective. If you can tell this, you are ready to go in the marketplace. If you can tell this, you are ready to go in a marketplace. So here, you understand that this is what? This is a corrective move. Too much noise outside there. Corrective move. Corrective move. Corrective move. If you can tell this, you are ready to go. So do not mind where this corrective is going to stop, where this corrective move is going to stop. It's not your job right now. It's not your job right now. But I will teach you that in next videos. I will teach you that in the next videos. So here, if you can tell that this is what? This is a, now, if you change to another time frame, how do you switch from one time frame to another? For example, in this case, how do you switch from one time frame to another? You see, I'm using frame of time frame. I can easily go to a monthly time frame or weekly. But first of all, monthly time frame, because I need a time frame that will give me a detail on these corrective candles, on these bullish candles that formed a corrective move. I need details about this type of candles. Any time frame that's gonna give me details, meaning a structure that was being formed in this area, is the right time frame I need. So I can drop 2 monthly time frame and see what I have. Dropping 2 monthly time frame. Dropping 2 monthly time frame. Dropping 2 monthly time frame. As you can see on the monthly time frame, I cannot see enough structure. I still see same candles. Do you see? This is how to choose time frame, guys. This is how to choose time frames. For example, here, I'm changing from monthly 3 month time frame to monthly time frame. Then I see I still have one candle. There is no clear structure. Simply candles, right? Simply candles. Okay, guys, this is what we need. So we need to change to another lower time frame to see the details we have here. But your job is to study the structure so that you took what? So that you take a sell on this high. This is what you are looking for. Finding sell opportunity on these highs. And at the same time, finding sell opportunity in this impulsive move, because you know you are in a clear down trend. This is where you have your opportunity. Here in this area. So again, if you want to buy in this corrective move, you will understand what you are doing by repeating the same exercise we are going to do. So I'm dropping lower to weekly time frame, to weekly time frame, to a weekly time frame, to a weekly time frame. I'm dropping into a weekly time frame. So on weekly time frame, you can easily see how market was switching with this clear rejection, switching, creating a new structure, guys. A new structure. On weekly time frame, we can easily see a structure we are going to use to take a trade. We are seeing a structure we are going to use to take a trade. Now, starting from here, you can easily see that you have a structure high, you have a structure low, you have a structure high, you have a structure low. So after breaking this structure low, so after breaking this area, you have a structure high, you have a structure low, you have a structure high, you have a structure low, you have a structure high, then you've got a break. You have got a break of structure. Do not mind about what follows after a break of structure. Do not mind as of now. Do not mind about what follows about after break of structure. And again, as I told you, once the market is pushing here on this level, do not mind where it is going to stop from. You understand? So, but if you watch a previous video about the hidden invalidation, for example, you will immediately see why it has to reach this zone, this area, this whole area, this zone. Why it has to stop in this area. You understand? Of anatomy of a range. This is your secondary zone after BOS here. You understand that? If you remember anatomy of a range. So here you are studying what? You are studying weekly structure. Weekly structure. So these are weekly pullbacks. These are weekly pullbacks, guys. These are weekly pullbacks. If you can do a study carefully on this, then you are ready to go. These are weekly pullbacks, guys. Do you see that? So if you want to study all of these pullbacks you have here, or these corrective moves, please use daily time frame. Please use daily time frame to see the details you have in this retorted zone, so that you can take a buy. Because you already know where you are heading to. So the same here. Try to see how market is creating what? How market is creating a structure. A structure. Do you see that, guys? Weekly structure. This is the high, this is the low. This is the high, this is the low. Shallow pullback, you understand? Pullback in this retorted POS, you remember. So here, weekly high. Then you've got what? You've got a break of structure. I'm using this kind of break of structure in terms of ranges. But when we start talking about invalidation points, I'll be showing you what we focus on. So you combine this with your ranges. If you understand the anatomy of range, you immediately see secondary liquidity here, and why you have internal structure continuation. Guys, you remember. So make sure you you do it the smartest way. You see that? Then you have a break. A new trend is forming. Now you have an idea of where you are heading to. Do you see that? Do you see that? Now, here again. So a corrective move is starting. As a corrective move start, this is going to be your weekly high. This is going to be your weekly low. This is going to be your weekly high. This is going to be your weekly low, which you fail to create a high. Okay, it succeeded, I think. High. No, it didn't succeed, right? So this is a failed low. It failed to create a high. So we've got a break or structure, a high. So we've got a break or structure on this area. Sorry, I think this was a break or structure. Let's see. No, it's not. It's not. So a break or structure took place here. So your job is not about whether market is going to stop here, or there as of now, because there is always ways to know that. Your job as of now is to see if you can identify all of this structure based on your time frame. Based on your time frame. I told you, start from higher time frame as much as possible. If you start from lower time frames, you will fail. For example, if you start from weekly like this, you will not understand what is going on. Please start from higher time. You will not understand what is going on. Please start from higher time frame as much as possible. Switch a little to lower time frame until you find a recent time frame that gives you the details you need in your structure. The details you need in your structure. Hope you understand what I mean. Hope you understand what I mean. Have you seen that? Hope you understand what I mean. So now that you understand this structure, so what is trade invalidation? Trade invalidation is like a classic Quasimodo pattern, but with some rules. So here you will have what? You will have a structure forming like this, for example, and you see market is forming like this, for example, and you see market is pushing higher. So as market is pushing higher, as long as we break here, if you can see this break or structure using a line chart, I'm telling you a line chart. This time I'm not talking about ranges. I'm talking about this pattern. If you can see a structure like this using what? Using a line chart, then you've got your invalidation point. So where is invalidation point or invalidation structure? So you look at the last highs and lows that were broken. This is the last high, this is the last low that were broken. So this was broken here and this one was broken here. So here, this is going to be your invalidation point. Once market is coming back on this area for your sell setup, when market is coming to this area for a sell setup, so you understand what I mean here. So here, the reason I'm telling you a line chart is we need to see a candle, the candlestick body crossing below here, crossing below this low. So meaning the line chart doesn't show the wicks. It doesn't show the candlestick wicks. So the line chart is the best choice when it comes to looking for a good break here on the with candlestick body. With candlestick body. So a good break here. So use a line chart. Once you see a line chart breaking the low, then the price comes back on this area, then you are ready to. So this is a classic here, then you are ready to. So this is a classic invalidation point, guys. This is a classic invalidation point. Hope you understand. This is a classic invalidation point. So you guys, I can give you an example on Euro NZD. Then next videos we will be using the same concept we are done talk about in USD JPY, and I will be showing you guys how to use this concept and find a trade idea. So on Euro NZD, FXCM, on Euro NZD, I'm going to show you an example. I'm going to show you a recent that was unfolded. So for example, I'm telling you, try to do what? Try to see the structure. For example, on a monthly time frame, here, on a monthly time frame, I can simply see what? I can simply see this type of structure we have, right? So something, let's say, may form. You understand? We expect another pullback. Do you get the idea? We expect another pullback. Now, my focus now, since I don't see the details, I need to go to a weekly time frame. On weekly time frame, I can clearly see something like a pullback forming. This pullback, if they succeed, it may even continue till it reaches this zone, as we are done talking about. This is a monthly high, so we need a certain pullback coming here. That is the first idea. We are not talking about anything else, just that. We are not talking about manipulation, because those are advanced concepts that are somehow difficult for you guys to understand. So here, we go to daily time frame. On the daily time frame, what do I see? On the daily time frame, I can see a clear structure, then a structure is broken. A structure is broken, guys. Do you see that? You can see so many structures here. High, low, high, low, high, low, high. You can clearly see a break. So in a scenario like this, how do you identify invalidation point? Remember, invalidation point, we always use a line chart. A line chart. We need to see what? You need to see a pattern like this on a line chart. And then this is going to be your invalidation point. So you need to see this on a line chart. Then you have what? You wait for a pullback, then you look for sell opportunity in this area. So here, if I turn on a line chart, let me turn on a line chart like this. On the line chart, you can easily see a structure. You have a clear structure highs and structure lows. You have a high, low, high, low, high, low, high. Then you've got a break. On a line chart, you've got a break here on your line chart. So after getting this break, this last high that was broken is your invalidation point. This is your invalidation point. You look for sell opportunity when the market is trading on this line. When the market is reaching this line you have here, this is when you say, okay, this is the time to look for sell opportunity. Market is gonna sell from this zone, so you stay ready to find what? To find the opportunity in this zone, in this area. What we want most of the time is to see a candle trading in this area and reject, leaving a wick above, like this. Leaving a wick above. Leaving a wick above. This is what we want to see here. So after seeing this, after identifying your invalidation point, you can simply switch to your candlestick chart. Have you seen it, guys? You can easily switch to your candlestick chart. So you need to sell, you need to look for a reversal in this candle forming here. You need to look for a reversal on this candle forming here, because it is going to immediately reject the zone and start selling all the way down. All the way down. Hope you fully understand the concept of invalidation. I'm not talking about entries. I'm simply showing you how to identify a setup and a sell zone. Hope you understand. So again, a new low is formed. The low is formed here. Market creates a low. You see that? Corrective move, a push. Now, push to downside. Then another corrective move. This corrective move, where is it heading to? Try to see that. You have what? You have invalidation point here. Because you have what? You have a structure high forming. You have a structure high forming on this area. You have a structure low, a structure high. Then you've got a break here. You've got a break here. On line chart, you must see it on line chart. That is the rule. It's not about ranges, because when it comes to ranges, we consider the wicks. I'm simply showing you invalidation pattern and how to validate it. So you switch to your candlestick chart. Then you need to do what? You need to find sell opportunity on this wick, on this candlestick wick. Because this candle trading, if you see a candle is trading on your invalidation line, please switch to right time frame for reversal. Please switch to right time frame for reversal. Hope you fully understand what I mean, guys. So this is what will be diving deep, because I told you I'm gonna give you a simple classic setup. This is for sell. I intended to use a sell setup. This is for sell setup, but listen, I will be sharing you more setups as we move on. This was a classic setup, guys. So make sure you subscribe. Show me that you are ready for that. Like the video, share the video to your friends, and guys, leave your comment. Show me that you are following what you are doing, and be ready for this video series. So tonight or few hours after this video, so you may get another one, guys. So see you soon, guys. Make sure you subscribe. If you want to join my Telegram channel, make sure you check in the video description, guys. You can find a Telegram channel or my contacts if you want to ask anything about this. You can message me asking about this. No problem at all. Until next time, guys. Until next time, good luck and good trading.